$300 trillion. That's not the plot of a science fiction movie. That's the actual amount of debt hanging over the global economy right now. To put that in perspective, if you earned $1 every second, it would take you over 9 million years to count to 300 trillion. Governments, corporations, households, everyone owes someone, and the bill is coming due. So here's the question nobody in power wants to answer. What happens when the entire world can't pay its debts? Debt isn't new. Economies have collapsed under its weight before. In 1929, excessive borrowing triggered the Great Depression. In 2008, mortgage debt nearly broke the global banking system. But here's what's different now. We never stopped borrowing. After 2008, central banks didn't let the system reset. They printed money. The logic was simple: borrow today, grow tomorrow, pay it back later. Except later keeps getting pushed further away. And now, global debt has tripled in just 20 years. We've built an economy that only works if everyone keeps borrowing. Forever. So how do we get here? Think of the global economy as a giant Jenga tower. Every loan, every bond, every credit card balance is another block. And every block depends on the ones below it staying stable. Governments borrow by selling bonds. Investors buy those bonds expecting to be paid back with interest. But when interest rates drop, governments borrow more. Because it's cheap. Why balance the budget when you can borrow at 2%? Corporations do the same. They borrow billions not to build factories, but to buy back their own stock. Debt inflates share prices. Executives get richer. And everyday people, wages stagnate, but costs rise. So they borrow too. Student loans, mortgages, car payments, credit cards. Here's the trap. The system only works if everyone keeps paying their debts. But paying debt requires income. And income requires economic growth. Growth is slowing. Populations are aging. Productivity gains are flattening. We're running out of blocks to pull. So what's the trigger? What makes this tower finally fall? It could be anything. A sudden spike in interest rates that makes debt impossible to service. A major country defaulting on its bonds, triggering contagion across markets. Or a banking crisis where institutions realize the loans on their books will never be repaid. The scary part? These risks feed each other. One sparks the next. A default raises interest rates. Higher rates collapse banks. Bank failures freeze lending. And when the tower falls, it falls fast. Silence. We've seen this movie before, but never at this scale. When debt crises hit, the pain isn't shared equally. Governments bail out banks. Then they cut spending on healthcare, education, infrastructure. They call it austerity. The rich, who own assets, get richer as central banks prop up markets. The middle class, buried in debt, gets crushed. Jobs vanish. Savings evaporate. Retirements get delayed. An entire generation pays the price. And because debt is global, the collapse spreads. No country escapes. Here's the unsettling truth. There's no easy way out. Countries can default and destroy their credibility. They can inflate the debt away and destroy their currency. Or they can keep pretending and wait for the inevitable collapse. The $300 trillion debt bomb isn't a possibility. It's a certainty. The only question is when it goes off, and whether you'll be ready. So here's my question for you. Do you think governments will default, inflate, or just keep kicking the can down the road? Leave your answer in the comments. And if this opened your eyes, share it with someone who needs to see it.